Hello everyone. In this video, I wanted to go over session profiles for you, just so you can get a bit of a insight as to how I use them, the methodology behind the timings of them, and a few other things. Just general use case for the session profiles. This template specifically will be released probably in a few weeks once this new XO updates is out. So I'll just get that out of the way. First of all, market profiles. I think if you don't understand market profile, go watch another video of mine. I cover it there probably thoroughly. But each session in this case, okay, so Asia, London, New York close, how do we decide that? Each market profile is dedicated towards one session. Now, the times I'm using for the sessions are 0 to 6 a.m. and these are UTC plus 0 for Asia, 6 a.m. to 12 p.m. for London, LDN, 12 p.m. to 8 p.m. for New York, and then for close session it is 8 p.m. to the close/open again. So you have 4 sessions. Now, how I came up with those sessions, and if you go over to chart settings, sessions, manage sessions, main sessions, so you can see it here if you want as to how to configure it. I've just done this. What I did was, and this is just really important to get an understanding as to how it works, from the very beginning of the day, I am continuously collecting data, and I have, and so does everyone really, to access to volume-based data of different exchanges, etc. And what's the median volume on average, or the median and average volume, and you can compare the two, or from the volume of each 30-minute period. Okay, so let's just imagine this is a graph. This is how I would do it. I'll just do this all for you here. Okay, you'd have volume on this axis, time on this axis from the open to the close. So just so you have hopefully it's a good visual for you all. And Asia session, essentially how it would work was, Asia session would start off with fairly high, let's change the color quickly here, with fairly high volume. Okay, it would stay around quite high, and then you get this drop off, okay, towards, I believe, 3, 4, 5, drop off. Then you get this spike up, and this spike, okay, that I would notice would be at 6 a.m. Okay, so if we just note this, 6 a.m. So all of a sudden you've got a spike in volume there. And that's now the start of London session. So you've had your initial spike from open for the first hour or two, whatever. Then it dies off towards 2, 3, 4, 5. And then you get 6 o'clock, 7 o'clock, it rises a bit. And then it again really tapers off for a couple of hours before, again, you then get the New York 12 o'clock major spike, okay? So let's just highlight this here. And this isn't obviously drawn to scale, but just so you get a good understanding, you get a major spike here. And this is actually really important because it wouldn't be at the generic 1:30, 2 o'clock, traditional New York open time that most people are familiar with. So that is why I would always go 12 o'clock would be my New York open. I'm looking for volatility actually to occur from this point onwards, okay? And not from before, after this really. I'm, preempting that. Obviously, you do get still that spike again at 2:30, but you actually do get an initial volume spike at 12 o'clock as a median across the period. And the same philosophy applies, and you get close session. But just so you have a thesis as to how I did this, it's based on the peaks and troughs from session times. Okay, that is what this is based upon. So that is how these sessions are built up. Asia, London, New York close from this chart here. Now, one use case that I'm using for this, very, very simply, is poor highs, poor lows. I've covered this a lot of times, especially heading into weekend price action, on the 30th, for example, 31st. New York leaves this poor session low behind, okay? And I'm thinking, New York session generally tends to not leave poor lows behind, poor highs behind, and I could set this to extend out. But I'm using this as a magnet, especially as you head into like the weekend, right? You're going to get a lot of sideways. Let's expand all blocks. Heading into the weekend, you're going to get a lot of sideways price action, So when you do get that, it's eventually, you can be using this as a bias point to say, okay, I'm going to look to revisit this poor low in New York session. So that's method and use case number one for the, the session problems. That's really, really simple to do, is literally just looking at poor highs and lows. And that means I'm using the 30-minute 80 tick. That's also quite important to reference. And again, like I said, this template will be released later down the line. Yeah, it's a fairly simple one. The other one is looking at discrepancies between time and volume point of controls. Again, it gives you a really good idea as to what's going on with the volume in terms of shift in momentum. Really, really look at this. I'm going to show you something that's really insane here. Just dive into the weeds a bit. So we have Asia session here. Okay, clearly marked out. You have a poor high. So this is also not just New York session. You have it on Asia, whatever as well. We can look to be revisited, but on the right hand side of this we have the volume profile, and I've got this ray here, this red ray that you're always seeing extended is the volume profile, not time point of control, so where the most volume has occurred. And in this case, price is trending down. Okay, it's trending down, and you see the volume point of controls here, which generally means you want to see price and volume moving together. So when you then eventually get this move back up here, okay, and also to note, so I haven't highlighted the time point of control, but the time point of control is simply the one with the most amount of blocks. I don't need to extend that. I can see that. So you've got volume POC here, time POC here. That's a discrepancy between the two. I would tend to go with the volume discrepancy, the volume POC. So I want to see continuation in that direction, preferably. So eventually, if we just expand these out, right, you can see you get the poor high. Most of the volume is actually coming in here. Price extends away from it. Let's now look for mean reversion to come back to, and revisit this, the trend continuation, essentially. Not the poor low, but just trend continuation, because we've got that volume discrepancy between the volume and the time POC. You're looking for trend continuation, and obviously it then extends throughout New York. So that is the second thing, is to be looking at discrepancies between time and volume point of controls, because they can be really useful. The third being simply merging TPOs together, or looking for naked point of controls for general basic support and resistance levels. Okay, so the first one, if you're just looking at this chart here, I only really look for support and resistance from volume POCs, not time POCs. I prefer volume POCs. The microstructure reason behind looking for SR at these levels makes much more sense than the time one. I'll dive into that in kind of nuances in another video or another segment. But you obviously have these POCs here which can act as support and resistance, and you can be looking and diving into, if I set the setting here within the module to volume POC profile text type. Oh, I do have it on volume. Okay, I thought I had it on delta for some reason. So you see the volume, how much volume's coming in at your specific POC that you want to be seeing price bounce from, for example, and that can have an influence as to the likelihood it rejects or literally just passes through the level. Another thing is obviously if you're merging these. So if you want to merge, so if we just look here, for example, this is going to be a good example. So what we have here is, and this is how I'd look at this honestly, you have New York session here, which is expanded, and this is, I believe, into Friday, Saturday, Sunday type price action. And then you've got all of this internal price action. So close Asia, London, New York, close Asia, London. This is all literally, apart from I think this just maybe tapped above it, is internal. So what I would do, and even this close is internal, I would go back. So this is a clear range here. I would go from here, from the close, start the merge, go back to the New York session, stop the merge there. Now I have one big naked POC. That's literally coming in. Now I'll even merge this one back one as well, because it's not going to have an effect. But you can see here, this is where we have a lot of weekend price action, a lot of people that are trapped potentially that were shorting or longing within this range. Clearly they're actually shorting a lot of them here, because you can see the deltas overlaid. But you'd have a lot of potential trapped traders nonetheless still here that would want to either get out at break even or close their positioning, whatever it may be, or taking profits. This is a zone where price could then turn from, okay? And it's also, the volume is a lot higher than if you just had one single POC on its own. So you can see how we've just taken the New York, massive profile, wide range, internal sessions after that, merged them together. Now we've got a larger POC that's respectable in the higher time frames for better rejections. So that's how I'm using this. The last thing I would say as well when I'm looking at these profiles is number one, well, there's actually two more. Number one is that I want to see the quick and most easiest actionable thing you can look for is I tend to not want to see London session make a daily high. Does that mean every time? No, there's definitely big nuance here. Because actually when you look at this chart, London session putting this low, London session putting this high, but there's deep nuance behind the times I want to see these revisited. Okay, so for example, on a day like this, right, this London high, price reverts back and eventually takes it out. What I want to say around this, okay, is that when I see London session put in a daily high or low, I'm not going to blindly long or short towards it, but what I am going to do is I'm going to zoom in, and what you tend to see, okay, let's say London session puts in the high, a really good confluence factor to say, okay, this is going to be revisited, is that if there's too much selling at this high, okay, what I mean by that is that you then start looking at footprint charts, etc. But if there's too much selling at this high, price is generally going to come back and revert back towards it. You want to see a lot of excess, towards the buy side in this case. That would then definitely say, okay, it's going to move back down. There's a few other stats around this. Tuesdays, for example, I have an exception towards Tuesdays, London highs. That is something I'll probably discuss in a group or something later. But that's the first thing. London session, you can look for that for mean reversion plays. If you've got stats on other sessions, you can be doing that too. You can be merging, splitting profiles, whatever, to use that as targets. And the last thing, as I've briefly covered in this, is looking for trap traders. So like I just covered within this, you can be looking, for example, I've got the delta overlay here on. Okay, so this is really interesting, right? Look at this. So you've got London session here on the 4th yesterday, and I've got a delta overlay which shows how much whether people are long or shorting within that a specific tick region. Okay, so if I then just expand blocks and letters, expand both, you could see here, and if I merge this, I think we leave back, merge it back one. Let's reset this. Merges back one. Right, so I can see where people are longing, 3K. This is volume, but you can see the percentage of delta here as well. So if you just go to chart settings, TPO, delta percentage of bar as well, I'm having that as overlaid, but I'm also got a delta filter on. So when the delta is a certain value to one side, the excessive buying or whatever, that's also highlighted. Now, with that said, how do I use that? Right, if I've just merged this all together, right, and I can see that there's buying happening here, there's some buying up here, but most of the buying is here, actually where this POC is. I would say, in relation to all the other context I have throughout the day, etc., and I'm just giving you guys all ideas, as to implement into your system, but there's buying happening here, essentially. If price gets back above this zone here, let's not use this. If price gets back above this zone here, I'm expecting much larger continuation. So my thesis now, just looking at this as a whole, is going right. Whilst price remains below where the majority of the buying was happening in the downtrend, okay, whilst it's fair game to say this is going to still continue down until this zone is now reclaimed. Okay, so that's the final thing. Just literally using the delta filters within the volume profile itself to decipher where people are trapped, where there could be reversions happening, at what point is a certain trend going to be over, and so on and so forth. So yeah, I hope you found this actually useful, and I'll catch you all later.